it's not a upbeat time for the global economy or for China. Where do you think the economy is now in China? Because they got that 4.8 GDP forecast, but people are saying that's backward looking. We're looking at perhaps weaker numbers, which would probably be underscored by, for example, the consumer spending numbers we got recently as well. What's the trajectory for China's economy right now?
Currently, unfortunately, momentum is pointed down. The year started well, and you see that some of this reflected in the Q1 numbers, which were quite positive. January, February, quite strong. But March was already pointing down, and we see this continuing in April. Consumer spending is one aspect linked to the COVID lockdowns, obviously. The Ukraine war has ramifications for China as well. Energy prices are very high. That matters in the end for costs and investment. And we have an ongoing issue with the real estate sector that is still in crisis, and so we have an undercurrent that's also fairly weak.
How much weaker is it going to get? And what's going to determine that? I guess that's the big question. There's a lot of question about now the Shanghai lockdown, Shenzhen lockdowns. Maybe they're starting to ease, but is there going to be another variant? Property market's still weak. There's a long list for China. What is your sense of how this is going to play out in the next, say, 6 months?
Well, our forecast is out there, and the forecast has sort of come down quite considerably. We started at 4.8 in January for the year as GDP growth figure. We're down to 4.4, and it's because of these factors that you just listed. And all three of them, the real estate, the ramifications of the Ukraine war and global energy market, and the domestic COVID situation could get worse. So these are all drivers of the reversed forecast, but there are also risks going forward.
Well, it sounds to me like this is a bit asymmetric then. You're not looking for a big rebound, and the concern is maybe it gets weaker. It really stands out in the World Economic Outlook when you talk about the big drivers, the big risks for the global economy, that right there in the top 4 easily is China's slowdown. Why at this point in time is China's slowdown so important for the global economy that you would place it with the war in Ukraine, things like that?
Yeah, we have a lot of headwinds that the world is facing together. So a large economy like China, sort of pointing down in terms of momentum rather than up, is an issue. And so we would hope that policymakers accept that challenge and will increase policy support, both on the monetary policy side, but particularly on the fiscal policy side, where there's more room for activity.
Helge, does the PBOC need to do more? On the monetary policy side, people keep waiting. We got the RRR cut. We didn't get the medium-term lending facility lowered. Maybe people are looking at the loan prime rate today. Others say, what good does it do to provide liquidity or credit if people are locked up and they can't go shop? If businesses, workers, they can't operate because they can't get to the factory?
Yeah, good question. I mean, the PBC has acted, and that is very welcome. I also think that there's more coming. We have heard communication that promised structured credit policy support going forward. But I think it's really up to fiscal policy to step up. We have room for more fiscal support, and we have room for fiscal support that focuses more on household support rather than traditional infrastructure investment.
Helge, I guess when you're talking about fiscal support, we have seen a big step up already this year, as this chart on the Bloomberg shows, but I wonder how much they can really do, given that at the same time that involves a lot of leverage, especially from the local government side of things.
Yeah, I think China does have fiscal space. It's correct that debt is high, but given on the economic circumstances, it is still helpful to provide additional fiscal support. If you do it right, it will be efficient, and you need less spending to achieve the same growth support that you would do with the wrong spending. So household support is critical. Households are affected most by the COVID situation. We know that the recovery of consumption has been fairly weak throughout the last 12 months or so. So here's a lot of scope for support to be very effective, and I think that's where fiscal policy comes in.
Helge, at the same time as we look to more fiscal support from China, we're also seeing debt to GDP starting to rise as well. And in fact, debt is growing faster than GDP in China for the first time in a number of years, particularly when it comes to non-financial corporates. Is that a concern? Because we know that deleveraging is sort of on the back foot now, but is this creating more of those longer-term systemic risks?
well, you always want to be watching the balance sheet of firms. That determines what they do as conditions change. But currently, I think there is a lack of aggregate demand. And that's where macroeconomic policy plays the dominant role. It's not so much about regulation. It's not so about other issues that you may be worried about. It's a lack of aggregate demand, and here fiscal policy can and should be stepping up.
So what kind of steps should the fiscal policy consist of? We got the 23 steps that were announced in the last 24 hours. They seem to be aimed at helping small businesses, consumers, the economy deal with the impact of the lockdowns, which obviously China, like everybody, hopes are temporary. Are they on the right track? Do they have to do more?
Yeah, our understanding of the 23 steps is this is pretty much an agenda for regulators and for the PBC. And they're rightly focused on providing support for small firms. Fiscal policy has to help households. Households are vulnerable to shortfalls in employment, and you have seen that unemployment surged upwards in March. Somewhat surprising, but here we are. So fiscal policy can help by, for example, investing in the social protection system. There's a lot of room for improvement. There are holes to fill. There's adequacy issues that can be addressed. That will help China in the short term by supporting consumers, but it will also help it going forward, helping with a balanced recovery.